Hello and welcome. This is Business Incorporated on Channels Television. Thank you for joining us. I'm Chimeze Obi Iwago. On the program today, Zambia's debt relief vote sets tone for stormy restructuring. Sudan hopes to get U.S. funding after terror delisting. And OPEC Plus pledges to support the oil market as concerns grow over soaring infections. We'll begin the show with intraday market numbers, which were mostly negative except Nigeria's main index, which added 0.07%. Elsewhere, the JSE index in South Africa declined the most by 0.17%, while Egypt's main index shared 0.06%. Kenya closed positive on Monday. And in the Middle East, most markets were in the negative territory. Only the Qatari index was positive by 0.16%. Saudi Arabia's main index declined by more than 0.5% at intraday. In the UAE, Dubai's index shaved off 1.27%, while the Abu Dhabi index lost 0.37%. All right, let's cross over now to the European market, where stocks were mixed in the morning as concerns about the coronavirus in Europe and a deadline for U.S. fiscal stimulus to be agreed weighed on market sentiment. Let's bring in Chelsea now for more. Hello, Chelsea. Good afternoon. Well, U.S. stimulus talks are still driving markets this week. Democrats set today as the deadline for a deal with Republicans. Will they be able to reach an agreement?
This is being described as the do or die day for U.S. stimulus talks, and as of last night, they really were not much closer to actually reaching an agreement. We had seen Republicans and Democrats coming a little bit closer together over the past couple of weeks on both the size of the package and also some of the details. Democrats had been looking for a package around $2.2 trillion. The White House lately came up with an offer for something closer to $1.9 trillion. So they weren't very far apart, and they aren't very far apart on the overall size of the package. But within the details, there are still a lot of contentious issues, specifically how much of this money will go towards governments and state and local governments, and as well as things related to testing programs for coronavirus. So last night we did hear from House Speaker Nancy Pelosi that they are going to see what happens today if they can get in anywhere close to a deal. But for now, as they left it last night, there are still a lot of divisions, and investors are clearly losing hope that there will be a deal before the election. We're definitely seeing that in markets today, with the DAX down about 1% here in Frankfurt.
And some corporate news out there. Swiss bank UBS saw its profit nearly double in the latest quarter despite the coronavirus pandemic. What's behind the surge in earnings?
So UBS, like many other global investment banks, is really benefiting right now from the big increase in trading over the past several months. So they saw a 40% increase in trading of things like stocks and bonds among their clients. They also saw much higher revenues at their investment banking, asset management businesses. So they are generally benefiting from the fact that their wealthy clients are faring through this pandemic quite well. We've seen similar results from other banks, particularly those in the United States. Banks like Goldman Sachs, JP Morgan, these really big investment banks have been doing very well, but it's not really being shared across the entire sector. A lot of banks that are more focused on consumers or Main Street businesses who aren't really serving wealthy, high net worth clients have been struggling more, as they likely will see in the future as well. More and more of those customers defaulting on loans, on mortgages, things like that. Right now, government programs to help people through the crisis have been preventing massive waves of defaults, but these banks that are very much focused on consumers will likely see more pressure going forward.
And one of China's biggest tech companies, Didi, is reportedly giving up on plans to go public in New York in favor of a listing in Hong Kong. This has become a trend among Chinese companies. What's driving it?
It definitely has been a major trend for Chinese companies over the past several months. New York really used to be the prestige location to have an IPO, especially if you're, a homegrown Chinese company. It gives you sort of an international standing to go public in New York. But as we've seen tensions between the U.S. and China really ramp up over the past several months, many firms are now deciding not to list in New York or to not do secondary listings in New York and are going to Hong Kong instead. This is in part because the U.S. is potentially going to start delisting some Chinese companies that refuse to hand over their books for auditing. Most Chinese companies right now that are listed in the U.S. haven't been doing that. So companies like Alibaba could come under pressure in the United States in the coming months. So a lot of firms are just trying to avoid that. Didi is one of them, but also Ant Financial, which is the payments processing arm of Alibaba, also is avoiding a New York listing because of these tensions.
Chair Chelsea for updating us on those developments out there. And for happenings in the UK, let's bring in Juliana Olayinka. Hello, Juliana. Good afternoon. Well, IAG is one stock that is upbeat about the 1-hour COVID tests that began today at Heathrow. What's the update on this, and which of the stocks are rising on that news?
Well, you're right, Chimeze. IAG doing really well, leading actually the FTSE all share. Their shares are up by about 7.8%. Also, the aeroplane engine maker Rolls-Royce, their shares are up 4.2%. And this is all down to this LAMP test. That's what it's called, this 1-hour test that you can take from today if you're travelling from Heathrow airports at Terminal 2 and Terminal 5 to Italy or Hong Kong. Basically, you book a test online. It costs £80. And if you are COVID-free, when you get to your final destination, you will not have to quarantine. And obviously, quarantining is what's really kind of hampering the relief efforts of the airline industry. We know the airline industry has been completely battered by COVID-19. So this is seen as a really good sign, particularly from the British government. Grant Sharps, the travel minister, he set up this COVID subcommittee last month to try and think of ways to make travelling much more easier and to get people to come to terms with the fact that we will be living with COVID for a long time and people do need to travel, borders do need to start opening. So far, so good. The Heathrow boss has been on British media giving the thumbs up, saying it appears to be going well. But so far, it's only Italy and Hong Kong. They are hoping to increase that travel corridor window, and perhaps the US will be on that soon, as the British government are talking to the US government. So having a look at the numbers, the FTSE All Share is up 0.22%, the FTSE 100 is up by 0.12%, and the FTSE 250 is up by 0.35%. In currencies, the British pound is up on the US dollar by 0.01%, down on the euro by 0.26%, and up on the Japanese yen by 0.24%.
And we understand the government has offered a contract to a company called Open Orphan to develop a COVID-19 human challenge study model. How much do we know? What will it entail?
It's an interesting story, very science heavy, so bear with me because I'm not too strong on the details here. But I'm read that the human challenge study is pretty controversial. And what it entails is putting volunteers of a young age, from a teenage age, between the ages of 18 to 24, you would be administered with with whatever the sickness or illness is. So, of course, in this case, it's COVID-19. So they will give you a dose of COVID-19 and basically see how you survive, how it fares in your body. It has been called unethical by some doctors and some institutes, but it is being billed as one of the ways you can try and speed up the vaccine process. And of course, the British government, as with governments across the world, they are in a fast slapdash race to find the first vaccine. Even when we do have the vaccine, by the way, it's not going to be for everybody. So they're trying to find ways to mitigate against shortages. So the UK government have signed a contract with open orphan, and what they will be essentially doing, this pharmaceutical company, is researching just how much is a safe dose to administer into these healthy individuals. It still hasn't passed through the ethical and regulatory boards here in Britain, and if it does, we're not expecting the first trials to take place until well into next year. But I got a little bit of information here. The volunteers participating in the study will be between the age of 18 and 30. Their general health will be screened, and it won't be open to pregnant women. It remains unclear how many people will be accepted or will be participating in this trial, but apparently it's underway in America, and large numbers of individuals have taken part. So don't know any more information about this, but again, you know, I think that the whole world is looking for a vaccine, and some are doing whatever they can to make sure they can get one soon.
Absolutely. I guess that's a developing story, and we'll continue to keep a track on that. In another development, Bank of England policymaker Zambia has warned that the recent increase in COVID-19 cases is likely to undermine the UK's recovery from its COVID-19 slump. How is Via's statements being digested?
Interesting. Jan Vlieger, he is external Bank of England Monetary Policy Committee member. He was speaking at a webinar today, and really he was saying what everybody knows, which is the fact that COVID-19 and the increase of cases is going to hamper the relief efforts of the British government in trying to bring down the unemployment figures, trying to get people out spending again. And that's because of the way we are having to respond to COVID-19. In some parts of this country, there are lockdowns. We've seen a lockdown which is going to be starting in Wales on Friday. This means all bars, restaurants and non-essential shops, they will be closing. We're seeing tiered restrictions. Local leaders, particularly in the northwest of this country, Manchester is one of them, squabbling with the government, trying to resist the lockdown. And it's because of these lockdowns that is going to affect the economic recovery. Already the Bank of England have estimated that British GDP this year will contract by 9.3%. I believe unemployment is currently at about 4.1%. They predict that it will rise to about 7.9%, which is almost double. And of course, with COVID still rampant within these aisles, there are major concerns about the economic recovery. So no reaction on the FTSE, but I presume that's because investors have already weighed in this pretty dire commentary.
All right, thanks, Juliana. We'll leave it at that. Enjoy the rest of the day. And stocks, major Asian Pacific markets were mixed in early trade as investors react to the October fixing of China's benchmark lending rate. Mainland Chinese stocks were mixed, with the Shanghai Composite down 0.13%, while the Shenzhen Component added 0.43%. Hong Kong's Hang Seng Index rose fractionally. In Japan, the Nikkei 225 declined 0.53%, while the Topix Index also shed 0.65%. South Korea's Kospi was 0.42% lower. Meanwhile, shares in Australia fell, with the S&P ASX 200 down 0.75%. MSCSI's broadest index of Asia Pacific shares outside Japan dipped 0.16%. We'll take a break. When we come back, we'll look at the domestic commodities market as well as all the stories on the African continent. To stay with us. Well, Zambia looks set to move closer to being Africa's first sovereign default since the onset of the coronavirus pandemic, with bondholders expected to reject a request to put off payments for 6 months. A key vote today by holders of Zambia's $3 billion of Eurobonds will also be keenly watched by other poor nations, considering how to involve commercial creditors in debt relief talks. The Southern African nation, which has already skipped $142.5 million coupon payment, said it needs breathing space while it plots a restructuring strategy that strikes a balance between bondholders and bilateral, mostly Chinese lenders. A core group of Eurobond holders has already said it wouldn't support the proposal without assurances of transparency and credible plan to get the International Monetary Fund's endorsement. And Sudan's finance minister says the country will receive U.S. financial assistance when the African nation's long-standing designation as a state sponsor of terrorism is lifted. President Donald Trump said in a tweet on Monday that he intends to remove Sudan from the list after authorities agreed to pay $335 million in compensation to families of Americans killed in bombings in East Africa in the 1990s that Sudan's previous government under dictator Omar al-Bashir was accused of supporting. The delisting, which requires U.S. congressional notification but not approval, has been keenly sought by the transitional government that took over after Bashir's ouster last year. The finance minister said economically ravaged Sudan would be able to integrate itself with the global financial system, move towards resolving its debt and revitalizing investment. Inflation in Sudan hit more than 210% in September, with the economy forecast to contrast to 7.2% this year. All right, let's look at the domestic commodities space with food inflation currently high at 16.66% in September. The increase in bread price is said to be one of the contributors to the rise. Bread is one of the major household staples in Nigeria, and so on domestic commodities market today our focus is on bread and its substitutes. I'm going to have this conversation with Aisat Dahoud, one of the research analysts with Financial Derivatives Company. Good afternoon, Aisat. Thank you very much for joining us on the program.
Good afternoon, BC. Thank you for having me.
Well, this is not BC, this is Chimezi, I guess you know. Well, the price of bread has increased by 14%, while size and, of course, quality shrunk marginally. What would be the effect of this 14% higher bread price or smaller loaves on substitute commodity prices and the prices of complementary products?
Okay, just like you mentioned, bread is a very popular staple. There's no household you go to and they don't consume bread. That's not enough. So naturally, the increase in the price of bread would cause the demand for substitute goods like yam, plantain to increase. That is, the demand will increase, while the demand for complementary goods like tea, milk, and margarine would reduce. However, recent supply chain disruption have restricted free flow of goods from one location to another. Hence, the increase in the demand for substitute goods like yam, plantain, and others is dependent on availability of those goods.
Now, go ahead.
Okay, while the decline in the demand for complementary goods like tea, milk, and sugar, it would only be marginal because some people can still take tea, milk, and sugar without bread. However, the complementary goods like margarine, butter, and the likes would feel the decline in the demand more than that of tea and milk.
Okay, let's look at wheat, which is a major input for making flour. And of course, we know that flour is one of the ingredients used in baking bread. The price of flour has risen by 17% in a month to about 13,500 naira per bag. So how is wheat and forex rationing affecting the price of flour and by implication bread?
Okay, yes, wheat is a major input for making flour. Should its price increase, it would affect the price of flour and hence cascade down to the price of bread. In the international market, the price of wheat has gone up to about $231 per ton. And other factors aside the international price are all the things that comes together to affect the price of flour. So let's look at other factors like the higher cost of logistics to move your goods from one place to the other. Forex rationing, like you highlighted in the question. The CBN, the central bank, they're trying to reserve the scarce dollars and also boost our local farming production. So all this is going to cause a double whammy on the price of wheat and flour, which would also affect that because they have a direct relationship. So we will definitely see the effect of that on the price of bread too.
Now, the global grain prices like wheat that we're talking about, among others, are beginning to drop in the futures market due to projections of ample global supply. What is the outlook then for wheat prices in the near future?
Okay, both the demand and supply forecast by the EIU is set to increase marginally by about 0.5%. So by the end of the planting season for 2020-2021, we would have a supply of about 750 metric tons, while a demand would be at around 746. So the margin there is slightly, the margin there is slightly thin. So the price at the end of the season is set to be weak, to become weak, but picks up later on. So by 2021, 2020, we'll be seeing that's the next season, that next year, we'll be seeing prices to be as high as $235 per ton.
All right, thank you very much for your time, Isaac.
You're welcome.
And the global oil market prices slipped for a fourth straight day in the morning on worries a resurgence of coronavirus cases globally is stifling a promising recovery in fuel demand, while growing output from Libya adds to plentiful supply. Brent crude futures fell 32 cents to $42 a barrel after falling 31 cents on Monday. U.S. West Texas Intermediate crude futures slid 26 cents to $40.57 a barrel after losing 5 cents on Monday. Meanwhile, a meeting on Monday of a ministerial panel of the Organization of the Petroleum Exporting Countries and its allies, together called OPEC Plus, pledged to support the oil market as concerns grow over soaring infections. For now, OPEC Plus is sticking with a deal to curb output by 7.7 million barrels per day through December, and then shaving the cuts back to 5.8 million barrels per day in January. And with that, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwago.